Well, I imagine the only happy party this morning will be Greenpeace, and the economics of the oil market has done the protest for them.
Yeah.
Is this it now for Alaskan exploration?
I think for a very long time. You have to remember that Shell has already spent $7 billion to find absolutely nothing. I mean, they had huge hopes for this well. They spent years trying to do it, convince regulators, and at the end it was a dud. And I think it'll be many, many years before they'll want to risk going back.
Fredrik, bottom line, the economics of $50 oil, it's going to make it hard to make some of these projects viable, and you wonder what this means to the supply side story in the decade to come, don't you?
I mean, you can already see this in Baker Hughes. You can see this in pretty much all of the investments that have been done, trying to be done in the oil and gas sector for a while now. As far as we're concerned, I mean, there is a positive element in this, in terms of the fact that it will boost consumers and spending ability and so forth. But I guess the trillion-dollar question here is that going to mean extra spending on other things, or is it going to mean actually I'm just going to save that? And just at least on the evidence that we've seen so far, it's more coming down to savings than into spending, and that comes back to like the bigger questions than rather just oil.
Well, that's the consumer balance sheet. You look at the corporate balance sheet, they're cutting CapEx, but now they're cutting CapEx because they've got no choice but to cut CapEx, because these stories, these exploration projects no longer make any sense. And you wonder where the growth is going to come from for these companies unless oil rebounds back to 80, 100 bucks a barrel. Where does the growth come from?
I think today's story really shows the challenges that face the biggest oil and gas companies today. You know, what they're good at are huge projects, going out, drilling very expensive wells, developing huge oil platforms. And at the moment, it just doesn't make any sense. And people say that what shale does is cap oil prices long-term, maybe at $70 a barrel. You wonder where the new projects of the likes of Shell are going to come from.
Fredrik, you talk about the knock-on effects. Front page of the FT this morning, the Saudis pulling billions from various asset managers. They're trying to balance the book. As this story progresses, you look at these stocks, they continue to fall lower and lower, not just the energy, but the mining sector as well. People would say that Glencore surely are screaming buy at 150, 120, £1, not even that. We become a penny stock. When does it become a buy for you?
So, in my mind, it boils down to, especially if you're looking at the non-energy in terms of the miners and so forth, that becomes a question about China. It becomes a question about what they're going to do to the national grid, whether or not they're actually going to try to achieve their year-on-year target, which is 20% plus. So actually, today it's pretty much flat for what they've done so far year to date. It becomes a question about where inventories are, etc. So I'm quite happy to play the China story, but I do that through the copper market and zinc markets, or to some extent through the high-yield market in the States, rather than going directly into China, because that's what it's going to boil down to, whether or not you think that China is going to be able to stabilize their economic situation that they have ongoing at the moment.
Would you rather play the high-yield market than the equity market to play that story?
Oh, every day and twice on Sundays. No, I mean, listen, you have in the high-yield sector, you have, with 40% recovery values implied, you have something like 11% default rates that you kind of need to get. Whereas in the S&P, the consensus earnings estimate is 8.5% growth. Now, the likelihood of you getting 8.5% earnings growth and 10-11% default rates in the high-yield sector, I think is fairly unlikely. So from a relative expectation point of view, that's where you play it.
Just very quickly, the recent shakeout doesn't deter you at all?
No, because I actually think that that's now opened up for a valuation gap compared to equities, which you don't have in a lot of other sectors. So I'd rather play that story in terms of growth story with copper and zinc, but also high yield, and then have a large cash allocation on the flip side of that.
Fredrik, you're going to stay with us. Will Kennedy, Managing Editor for Energy and Commodities here at Bloomberg. Thank you very much for joining us this morning.